Just okay, bet. So what's good, family? I hope everyone's having a great day. I hope your Wednesday has been full of blessings and opportunities. And I hope today was a little bit of a challenge for you to make yourself grow. But today we're going to be going over something I think that's really important that a lot of people sleep on, and that's market structure, right? I think a lot of people get scared or tend to get frightened and hesitant when they see a bunch of candlesticks. So we're just going to break that down, and ultimately we're going to go over just a presentation just because I want to break down market structure for you guys. So I hope you guys all can see my screen. Let me know if you guys can. All right, perfect. Thank you. Bet. So market structure, right? Let's tackle market structure today. So what is market structure? Right? You want to know what you're learning, right? So we want to know what is market structure. Market structure is the behavior or condition of the current flow of the market, okay? And we'll hop on the charts, after we go through this presentation. It shouldn't take too long. But ultimately, that's what market structure is. It's the pattern and condition of the current flow of the market, okay? Nothing, really too complicated. It's just how the market is, how the market moves, okay? So next, there's three types of way that market moves, okay? You have an uptrend, okay, where you only take buying positions in an uptrend off higher lows. And I'm going to break down what higher lows look like and what lower highs look like as well. We'll break that all down here. But during an uptrend, you want to buy off a higher low because that gives you more opportunity to have more profit. Okay, so that's one way the market moves. The second way is a downtrend. Okay, and now a downtrend, you only want to take sells on lower highs. Okay, that allows you to minimize your risk and basically give your reward that much more. Okay, we don't want to sell off lower lows. We don't want to do that, and I'll explain why. So that's the second way the market moves, okay? Now we have a sideways market, which is known as consolidation, as I like to call it. That's when the market is literally just going sideways, okay? And I'll break this down. I have some pictures to show you guys, and again, we're gonna go on the, on the live charts and, really break this down. So you never want to trade in a sideways market. That is where a lot of traders, personally, I think, where they mess up on, right? They think they can, trade and buy and then sell and then get out of it right away. No. You don't want to do that. So do not trade in a sideways market. You want to trade with the trend, okay? So if the market's going up, let's trade with that trend. If the market is going down, let's trade with that trend. But if it's going sideways, do not trade. I highly advise you to trade. If you want to, that's totally your decision, but I advise you not to. Okay, so now that we understand the three types of way that the market moves, we want to break down what an uptrend really looks like, okay? So remember how I was saying how you want to buy off higher lows? Well, this is what I am talking about, okay? So in an uptrend, uptrends make higher highs, and then they come back down to make higher lows. They go up, make a new higher high, and then they retrace down and make higher lows. That's how market moves, guys. That's again, we're going to go into the live charts and really break it down, but that is what a uptrend would look like, okay? So that is how you identify an uptrend, is that if it has higher highs and higher lows. Now, with buying, you want to buy at the lowest point possible, okay? Especially with an uptrend. So buying at these lows, okay? You don't want to, you can buy here, but then market is going to retrace ultimately, is going to bring you into red, which is maybe activating your stop loss, depending on how tight your stop loss is. But then you're only catching this much. You're not catching this whole thing. Well, I'm selfish in these markets and I want this whole thing. I want the whole move. Okay. So it is very important that we buy off higher lows always. And again, you never want to trade against the trend. So if we are in an uptrend, you don't want to sell here and try to, get a quick bag because you're just going to get taken out. So buy off higher lows and we never trade against the trend. Downtrend. This is what a downtrend looks like. So starting from a high, going to a lower low, retracing and making a lower high. Making a lower low, coming back up, making a lower high, and then sinking down again. Okay. We only sell off lower highs, which is this highest point here. We don't want to sell right here because again, market can retrace, which can activate our stop loss. We do not want that. We do not want our stop loss hit. We want our take profits hit. So to minimize that, we are going to only sell off lower highs, which is this highest point right here. Again, I'm selfish. I want this whole move. Okay. I don't want the half of it. I don't want the half. I want the whole thing. Okay. So this is how you would identify a downtrend within the market. Now, same rules apply. You do not want to trade against the trend. So you do not want to buy here and get a quick bag. I promise you, I've blown accounts trying to do that. I've blown multiple accounts trying to do that. Oh, get a quick scalp in, a couple $100. No, it does not work like that. Wait until you're at a lower high and then you can put in your trade. Guys, trading is a lot of patience, okay? It's a lot of patience. So patience is something that you guys are going to need to learn and need to incorporate within your trading, okay? Now, that's the second way of a market. And I remember us talking about, consolidation in a sideways market. And I want to break that down and really show you what it would look like, okay? So in a sideways market, there are no higher highs being made and there's no lower lows. There is just equal highs and equal lows, okay? Like right here, this is a perfect example. So you see how it's just literally going sideways. It's not going up like how it is here, or it's not coming down like how it is over here. It's going sideways. We do not want that. Personally, I do not want to trade that. Okay, this is when the market is going to make equal lows and equal highs. That causes the market to go sideways. During a time like this, you want to wait for a breakout. So we notice and we recognize that this is a breakout. Now, why we want to wait is because we want market to make a move, okay? We want market to do something. So instead of trying to, trade and then, it comes back up and it's making equal highs and equal lows, that's not what you want to do. You want to make sure that you wait until it either breaks out for a buy or breaks out for a sell, okay? That's what you guys need to wait for. So when we're trading a sideways market, which we should never do, so don't do it. But when we are recognizing a sideways market, we need to wait for breakouts. Again, that causes patience. Patience is very critical to trading. Patience is a lot of what trading is. So again, make sure, you guys are kind of incorporating patience into your guys's thing, your trading plans and things of such. So that's the presentation. I just wanted to, kind of break down what kind of market, the three types of ways that market goes, so you guys can understand and kind of get that bigger picture. Now we're going to apply this to real life charts, guys. Okay, so we're going to go here and we can go I kind of already done it here. Okay. And I want to start on a fresh chart. So I'm going to go to a pair that I never usually do. Okay, perfect. This is perfect. Okay. So I know a lot of people get scared when they just see a bunch of candlesticks, right? Everyone gets scared when they see all these candlesticks. Oh my God, what's happening? This is so scary. No, it's not scary at all. Okay. And I'm going to help you not make it look scary. So, what I do, and I tell this to some of my team, I say, do not worry about these candlesticks. You need to look at market structure. You need to look at the overall movement. Okay. You need to start to train your eye to not look at candlesticks and to look at the overall movement. So, what I mean by that is this. When I trade, I do not see candlesticks. I literally see this. I go like this. This is what I see. Okay. And with more volatile currency pairs, these markets can be very confusing. Okay. So when you're looking at market like this, as such, it helps your eye a lot better with marking up your chart, with drawing up your chart, making a trade. You can see here a nice, support zone within here. It's easy to identify things, but, we take this away and it kind of gets a little scary. No, it's all right. You need to look at market like overall. Bitcoin is a crazy movement. Okay. A lot of people get scared by this. Like, no. Don't get frightened. It's okay. Like, especially this stuff. A lot of people get scared because it's like, oh my God, it's so volatile. It's so big. All these candlesticks. Okay, let's break this down. So let's break this down right here. This looks scary, doesn't it? Nope, not scary at all. So let's just adjust this, stretch it out. Okay. And let's start to draw. Let's start to see market like lines, not candlesticks. Okay. Yes, candlesticks are important. Candlesticks give you a lot of information, but when you want to figure out what market is doing, you want to see what is going on overall and see when we draw it out, how just less intimidating it looks. I could go here. See how just less intimidating it looks? It just looks so much better. It doesn't look as scary. I'm not as scared now. Now I can make my trade. Okay. So this is something that I do a lot. I did it with NAS. I trade NAS all the time. So the fact that I had it marked up before this call even happened means that I do it. Everything I tell you guys, I do. I'm not going to tell you to do something that I don't do. I think that's stupid. But you see how when we draw it out, how it's just way less intimidating than what it was? Because we take that away, right? And we go back to how it was. And oh my God, like I just see a bunch of candlesticks everywhere, a bunch of wicks. Okay, let's draw it out. Oh, that's better. That's how you guys should view the market. That's how you should draw it out. I do it all the time. I do it with every pair that I trade. I draw it out because it's just easier for my eyes. Now, with market structure and highs and lows, okay, let's go over that. Let's go over some real life examples of what that would look like. Okay. So when we're in a downtrend, all right, we have a high. We have a overall high. All right. And I'm gonna make this white just so you guys can see it. Perfect. So we have a overall high. Okay. So when we have a overall high, okay, let's go back on a downtrend. Okay, we have a high. All right, now let's break this down. Okay. We go down. And then what does market do? It retraces. It goes up. Okay, it retraces. It makes a lower high. It comes up right here. Okay. What else does it do? Now it makes a new lower low. Okay. Now it comes back up here. Market retraces. And now it makes a lower high. Market comes back down. And it makes a low. Guys, this literally looks like the picture. It's not as neat as the picture, but that's how you can identify a downtrend. Okay. Drawing things out honestly helps so much with like my eyes, seeing all these candlesticks and then seeing how big these wicks can be. It can be very, very confusing. Okay. Especially on trades that are very volatile. Let's go to another currency pair and show you guys this. All right. So perfect. So I'm going to see if you guys are paying attention. Ha. So I want you guys to tell me, you can either unmute yourselves, but what kind of trend is this right here? What would you guys say? What kind of trend is this right here? Correct. It is an uptrend. So how do we identify this as a uptrend? Well, we know that we have a low. So let's go back to this image here. So we know that we have a low. All right. Well, here's our low. So let's identify our low. Oop, I gotta go here. So this is our low. Okay. Now that we have identified our low, now we're gonna draw stuff out again. Okay. So now it has made a higher high. Market has come down and made a higher low. Now market is going up. See how it's made this higher high. And when I say a higher high, that means that this point is higher than this previous point, okay? So now it's come back to retraced, made a higher low. Now it's come back up and made a higher high, and so on and so forth. All right. We go to the picture. That's literally what it looks like. Again, it's not as pretty. It's not as, clean. But when we draw it out like this, and then we take this away, it can be very hard to see. It can be very hard to recognize. But when you do draw it out, it's just like, okay, that is, we are going in an uptrend. Now you know that you can wait until market, and this is pretty crazy. You can wait till market comes back, retraces, makes a higher low, and then you know what you can do? Since what do? We buy off higher lows. You can now take a trade off of this. So we can put your entry right here. Okay. We can ride this up. All right. Since we are in an uptrend, okay, make sure your risk to reward is proper. And look at that. You have just made a trade off of market structure because you recognize that market is going in a uptrend. Okay. We have a low here. Market makes a higher high, retraces, makes a higher low, makes another higher high, then it makes a higher low, higher high. It has made a higher low. Okay. Now, what is market going to do? It's going to make a higher high. And now you've won that trade. So market structure is, I really do believe in drawing it out and kind of visualizing. It really does help. Okay, it really does help, because if I took this away, like, with all these candlesticks here, it's very hard. It's very hard if you're not, well experienced within trading, to just say like, oh, yep, that's an uptrend, or yep, this is what it's doing. Okay, draw it out. Draw it out. Let's make some lines. Let's identify our higher highs and our higher lows, and let's do that. Let's base off that. Okay, let's go. Let me show you some downtrends. It's perfect. All right, so, well, this is obviously a downtrend. This is pretty obvious, but before we get into that, I want to show you guys consolidation. Okay, I want you guys to be able to identify consolidation. So I see consolidation right now. I see it right here. Right here. This whole, here, I'll box this in, or I'll box it off so you guys can see it. And I'm gonna, kind of break this down. Actually, that's not a good example. I want something like this, but very continuous. Perfect. Okay, so this is consolidation right here. So we're talking about outbreaks, okay? So when we're talking about outbreaks, I remember, if we were paying attention, that when consolidation happens, you only trade when it has an outbreak. So this is making equal highs and it's making equal lows. Okay, it's making equal highs and equal lows. Again, trading requires patience. It requires a lot of patience. So with that being said, you need to be patient for a breakout. So let's go over to our picture here. Okay, so you see how there was a breakout that happened here? Well, guys, look, there's a breakout that happened right here. So let's mark it up. I like the Eclipse tool. It's pretty lit. You guys should know how to trade on, or you guys should know how to mark up stuff on TradingView. If you don't, check out the Wi-Fi Money YouTube. That was a free plug. No, I'm kidding. Okay, so we identified our breakout. Now we can trade. Now we can trade, because look, this breakout had happened. Now it's in the uptrend. Okay, and we know it's in the uptrend because why? Because it's making higher highs, it's retracing, making higher lows, higher highs, higher lows, higher highs, and then it reverses and goes down. So when this is happening, we want to avoid this. We want to avoid this at all costs, because there is nothing worse than sitting, I'm at a trader, looking at your phone for 5 hours because the market is going up and down in the same direction. If you guys really think about it, it didn't move at all. Like, it literally just stayed in a line the whole time. I don't want to be looking at my phone for 4 hours while this thing is going to stay in the same place. Little do I know that, hoping for a breakout. So, wait for a breakout. A breakout had happened. Now we can capitalize on it. Okay. Now we can capitalize on it. So I mark up my zones on the 1 hour time frame, but I actually trade on a lower time frame. The only reason why I mark up my trades on a higher time frame is because of my strat. So I trade support and resistance. So here we can actually go, just a quick little sidebar. When you're on a higher time frame, your zones are more defined on a higher time frame rather than a smaller time frame. So what I mean by that is, let's go to NAS for today. Let's go here. Okay, bet. Yep, Santa Claus. All right, bet. So you see how I have my 1 hour support here? Okay. my 1 hour resistance is probably going to be up here. I had that marked up, but then I just replaced it. But what happens is on my 1 hour support from previous market structure, because market structure is always going to leave clues for you. This is a very, very good zone. And look what market did. Market respected this 1 hour support zone. Okay. So it respected this, wicked it, and then went up for 421 pips. So that's why I am on the 1 hour time frame, is simply because my zones are more, your zones are always more defined. They're always more defined on the higher time frame, and I scout. So the 1 hour time frame is the highest time frame that I'm going to go to. If you swing trade, it's going to be a little bit different. It's going to be for the 1 hour to the 4 hour to the day, and then sometimes even the week. But if we were to go on a 3 minute, it would look very, very different. So it would look very, very different. So you see how there is a nice resistance right here on the 3 minute. Well, you really don't see that on the 1 hour time frame. You see this support on the 1 hour time frame. So it's kind of just narrowing down your zones and your entry points and your to see when to take a trade. So like I know if market is in here that I'm probably going to take a trade, because it wicked here multiple times, and then it went for a 400 pip move on the 1 hour support. So that's why I do higher time frames. But to get back to what we were talking about, yep, no problem, Lupita. Thank you for asking. Back to what we were talking about. We want to not trade consolidation. So avoid consolidation. I'm going to go over what a downtrend would look like, just so we are more, damn, that's a huge ass drop. Just so we, you're familiar with it more. So this is a great example right here, I think, of a downtrend. All right. So when we are in a downtrend, again, we're starting from a high. So here's our high. So we're starting from a high right up there. And we want to find lower lows and lower highs. So again, let's draw this out. Let's identify this. So market comes down, makes a lower low. And then if it traces up, makes a lower high. Okay. And then comes down and it makes a lower high right here, a little one. And then it comes down here, makes a lower low, retraces back up, makes a lower high, and then makes a ultimate low. So that is what a downtrend would look like. Again, when we're looking at our perfect picture here, and it's not going to be perfect. See how it's starting from a high point, it's making lower lows, retracing back up from a lower low, going to a lower high, and then dropping again. Again, we only want to sell off lower highs. So we want to sell off these points right here, and I'll highlight them. You want to sell off these points right here. And I'm going to do this. Oops. Oh boy. Oh boy. Oh wow, it really doesn't let me do that, huh? It's kind of bogus. Well, I'll draw them out then. So you only want to sell from lower highs. So that point, and this point right here. Again, you can sell from a lower low, but personally, I want this whole thing. I don't want to just put in a trade right here and then catch this. No, I want this whole thing. It's all about proper risk to reward. Again, if I do take a trade here, I know that market is going to retrace back, right? And it may activate my stop loss depending on how tight your risk to reward is. So always sell off lower highs and always buy off higher lows, okay? So we're just going to go over one more consolidation example, and that should do it. That would be all I have for y'all. All right, perfect. No, that's not perfect. Consolidation right here. Boom. Bang. Perfect. Let me box this in. So I would say, yeah. So this right here is consolidation. It is making equal lows and equal highs. We can see that if we were to draw a straight line and do the lows, it would hit the line. And if we were to do the same thing with the highs, they would all hit the line. So market is literally going sideways. It's literally just going like this. And then it's just going like this. And like this. It's just doing that back and forth, back and forth, back and forth, back and forth. That's literally all it's doing. I do not, yep. So sideways trend. So what that looks like, okay. Sideways trend right here, making equal highs and making equal lows. It's not going to be a perfect picture, but here, making equal highs, making equal lows, equal high, equal low, equal high, equal low. We want to wait for a breakout, which had happened here, okay? And then it came back and then it broke out again. That's going to happen. You can't predict that. That's just how market moves sometimes. So our breakout technically is right here. Oh, let me box this. Our breakout is technically right here, but market came back up and then it just shot down. So again, with our breakout still being right here. Now with our breakout, now we can start to trade this downtrend, and then it reverses up to an uptrend. So we can trade that because we know it's an uptrend, because it's making higher highs and higher lows, and we know that this right here is a little downtrend because it is starting from a high point and it is making lower lows, and then it has come back up and retracing and making lower highs and then doing the same thing over and over. Little consolidation here, and then it ultimately breaks out and then keeps going up. So guys, that's really all I got for you. Thank you, for hopping on here. I really do appreciate it for, those that did hop on here. If anyone has any questions, definitely, let me know. Whether it be hit me up in the Telegram, drop my number. Here, let me actually drop my number real quick before this ends. So I'm gonna drop my number. Appreciate it, fam. If you have any questions, just hit me up on my number. I hope you guys learned something today. And thank you for hopping on here. Again, I'm very blessed to have you guys here on here, taking time out of your day to ultimately learn this information. So I appreciate it, fam. And I will see you next Wednesday. Peace.